What's up, One Rental at a Time crew? Michael had asked me to do a quick video on what's going on in the economy and how that's driving the stock market today, which is getting absolutely hammered. So hope this helped you guys, and Michael and I will be back chatting with you guys soon.
All right, the stock market is tanking today. Here's why and why we could continue to see pressure on stocks in the short term. Over the past 2 weeks, we have seen 4 inflationary reports come out, and they all said the same thing. Inflation is stickier and higher than what we expected prior. So let's break down the 4 reports real quick. The last one's the most concerning. So the first one is CPI, Consumer Price Inflation, what we feel as consumers. So for the month of January is expected to be positive 6.2%. It came in at positive 6.4%. Higher, the direction is what matters here. And where are we feeling inflation the worst? 3 areas: food, gas, and housing. 3 important ones. The second, producer price inflation. This is what the manufacturers are feeling on their input costs, which will eventually leak through to us as the consumers. It was expected to come in at positive 0.3%. It came positive 0.7%, 2 times higher than expected. Also worrisome. The third one, retail sales. Are we out spending as consumers, driving inflation higher? For the month of January, we were expected to see positive 1.9%. It came through at positive 3%. And where we're spending the most relative to where we were in the past? Bars and restaurants. So we are fat and drunk. And the fourth point is the most concerning, the jobs data. We were expected to add 185,000 jobs for the month of January. We added 517,000 jobs, over 500,000 jobs, almost 3 times what the expectation was. And the problem there is more people employed means more people getting paid, means more people spending money, means more inflation at the end of the day. So all 4 of these reports point to higher inflation that's going to stay around for a longer period of time, which causes the Fed to have to raise rates more aggressively than what we had previously expected, putting pressure on stock valuations. Stay diversified, guys. Hope this helps.